Hello, good evening, everyone. Good to see every one of you here once again. My name is Alex from MarketWise Asia. Okay, so as usual, today it is a Friday evening, 29th of July, 2022. We are near to the end of July, nearing to the brand new month of August. Okay, so if you guys can hear me loud and clear, please say a hi to me in the comments. This live is actually broadcasted to both YouTube and also on Facebook Live. Okay, so I think we are still a bit slightly early, as in not as in the absolute time. 11:30 is early, but as in yeah, still just started only. So I'm expecting more people to stream in. Of course, I think I didn't do this Facebook Live for 2 weeks already because last weekend was actually the Nasdaq Trading Festival. So I actually didn't do my Facebook Live. So I last did my Facebook Live was on the 15th of July, 2 weeks ago. Okay. So do you guys miss me or not? All right. Even if you don't miss me, okay, at least type yes in the comments lah. Okay, at least make me happy a bit, can or not? Make me happy, can or not? Okay, let me take a look at the comments right now, okay, while we're going to kickstart this session real soon. Okay, so let me see. Hello, Mary, Han Hock, Wei Lun, Kok Leong, Sandra, Ingfish, okay, Gilbert, SP, Kailing, Edmund, Jerry, Pauline, Ashad, okay, J, the stock god Gu Shen is here, okay, Pauline, Edmund, Xia Chao, Wenjie, okay, so sure miss lah, Wenjie say, okay lah, make me happy, can or not? So right now we have 100 plus, I think both combined from YouTube and also on Facebook as well. So yeah, and tonight I have quite a bit to talk to you guys. So I actually, again, I hope to make it short lah, okay, within an hour. I'm not as, long-winded as our stock god Jay. Okay, so let me kickstart this session right now. So let me share my screen first. Just give me a moment. Add to stream. All right, so let me zoom in over here. Okay, so while we wait for more people to come in, okay, let's kickstart this session. All right, so as usual, my disclaimer first, whatever I share today is just for education and informational purpose. It is not a recommendation to tell you what to buy or what to sell. My opinion doesn't mean that I'm right, okay? So please do your own due diligence. Right, actually, I think last week, okay, just before the Nasdaq Trading Festival, I actually met one of my friends. He actually said that, hey, Alex, okay, you shouldn't be saying that I'm always wrong. You are always wrong, because those, who are new to you, might misinterpret it and think that you are really, really always wrong. And if you're always really wrong, then why should they listen to you? He said that it's not good for my branding. Okay. I don't know. I mean, what do you guys think? Okay. Of course, I always say that I'm always wrong. It's in a way that to cover my backside, okay? To cover my backside. This is really just a disclaimer, okay? So maybe I should change to say that I could be wrong, okay? So please don't copy me. Please don't copy me, okay? So yeah, please do your own due diligence, okay? Yeah, all right. So yes, so before I kickstart, right, so I'm sure that quite a number of you here actually attended the Nasdaq Trading Festival over here. All right, so before I go into this, right, so just to let you know, if let's say if you are new, okay, or if you attended any of the session, the replay is until the 31st of July, which is this Sunday. So please, make sure that you go and watch it. And if you're totally new, right, so please head over to the link over here. All right, this is the Nasdaq Trading Festival. Let me copy the link. Copy the link, and I'll post in the comments. Okay, so this is the Nasdaq Trading Festival, just ended last weekend over here. All right, so you can watch the replay. A lot of the topics are very interesting over here. Just a quick show of hand over here. How many of you, how many, as in like, which speaker do you like best? Okay, for me personally, I think, of course, our keynote speaker, Larry, I think the content is really, really good. Okay, and of course, he is pretty bullish on the US market, and he thinks that the US market is heading for a 3-year bull run starting soon based on his cycle analysis. Okay, so I think pretty interesting. I'll go through some of the things that he is using. Okay, and I'll go through with you. But I think that Larry's content is pretty interesting. Of course, I'm not saying that the rest are no good. They are also equally good. Just that, I like Larry's content the best because I'm quite intrigued by how he uses, cycles, forecasting and such. Pretty interesting. So go do ahead and watch it. And of course, I will also be using this US stock sectors cheat sheet later. So if you have already, registered for this event, you should have downloaded this US stock sectors cheat sheet and also the bonus video. Okay. All right. So yeah, once again, I will post the link in the comments. Okay, of course, Larry William is the best. Jay, somebody said Jay is the best. Okay, fantastic. All are very, very good. Okay, so I mean that, yeah, this is, of course, Larry can't make it live. So last minute, he can't make it live, but nevertheless, I think the content is still pretty good. Okay, so let's kickstart this. And yeah, of course, today, I think you guys should know already, right? This US GDP, for 2 consecutive quarter. I'm sure this is already late news. Yesterday, I already posted on the Telegram channel. And by the way, if you haven't subscribed to our Telegram channel, do subscribe to our channel. It is free. Okay, right now we have about 5,004 people in the channel. All right, so I mentioned, actually I broadcasted lah. Okay, so this breaking news, the US Q2 GDP, okay, actually fell negative 0.9%. Okay, previously was actually minus 1.6%. So technically, we have already 2 quarters of negative GDP, which means that we are in a technical recession already. Of course, I'll go through that later. The economics actually say that, we know, hold your horses, we are actually not in a recession right now, okay, because we are looking at others variables, others macro things, others data to tell us that it is still not in a technical recession. Okay, so let's go through this one by one. All right, so of course, this is already late news already, old news already. Let me go through just in case you don't know. US GDP contracted for 2 consecutive quarter. Okay, so can read through the news over here. All right. So yeah. So can you see what I want to go through with you that this part over here. All right. Let me try to zoom in over here. Zoom. Okay. Is it here? Okay, all right. So, but economists, the Fed and the White House said that economy is not in recession based on the broad measure of activity. So if you click read more, all right. So they have other variables lah, So let me see. Okay, government spending, a lot of other factors also. You can read through this yourself. So technically, we are in a recession, but they say that we are not in a recession. Okay, so this one, okay, but just in case you want to know the data and such, right, there are basically, a few places that you can get, a lot of places lah. But of course, one of the most common one is actually trading economics. I'll post the link in the comments over here. Okay, so this is the site. All right, so you can see that the GDP growth rate for the past 2 consecutive months, all right, negative 0.9% and negative 1.6%. Okay, this is one site, trading economics. Some of you might be familiar with this site. Another one, which I think I mentioned previously, I think 2 or 3 weeks ago, all right, before the NASDAQ Trading Festival, is actually this site called the macromicro.me, which is also very interesting, okay, and a lot of data, very similar to trading economics. So you can go over here and take a look as well. So macromicro.me, I'll post the link in the comments as well. So you can zoom into the year to date. All right, can you see that over here, same data as well, minus 0.9 and negative 1.6%. So all these, you can take a look yourself over here. I won't go through that anymore. And of course, judging by the, 75 basis point rate hike, right? Again, old news already, you should know already. So the market actually didn't go down. In fact, it actually rallied up. Okay, so I'm not sure how many of you actually remember. I think 2 weeks ago, I mentioned that I am actually secretly bullish on the market? How many of you can actually remember? If you can remember, just type me in the chat box. I was, okay, pretty bullish, secretly bullish. I mentioned the word secretly bullish. You can remember, just type me in the chat box. Okay, so the rate hike over here, countdown to rate hike. This is also, I mentioned, nothing new over here. Of course, if you are new to this Facebook Live, then of course this is might be new to you, okay, but anyway, I'll post the link in the chat box. So this is actually the probability of the rate hike for the next, until the end of the year to until next year. So let me try to zoom in over here. So this is a probability that the rate hike, and of course this probability of the rate hike is based on the Fed fund rates. Okay, all right, so you can see that the current rate, okay, interest rate, it is 2.5%. Okay, so until the 21st of September. So in total, until the end of this year, there are 3 more rate hike. Okay, rate hike. So it's September, November, and December. So for September, the probability, the chances is 72% chance that you will hike 50 basis point. Okay, 50 basis point. Okay, BPS, or basically is 0.5%. All right, so subsequently, so after that is 2.5% plus another 0.5% is 3% already, right? So November, 3%, it is 64% chance that you will hike about 25 basis points. Okay, the chances 64% chance, so pretty high. And then until December, okay, also about 25 basis point, okay, BPS that you will hike in December. So from now, okay, 75%, okay, previous month was 75%, this month was 75%, and then September 50 basis point, all right, and then November 0.25%. So to make it about the expected interest rate for this year, they expect about 3.5%. So to make it 3.5%, all right, for the interest. All right, so that is the hiking. So everything all clear on this. So at least you know what you are expecting for this coming months until the end of the year. So if you can understand me about this rate hiking thing, okay, just type yes in the comments. So 50 basis point, 25 basis point, and then 25 to make it 3.5. Can? If you understand, just type yes in the comments. Shit, I forgot to bring my water in again. Okay, never mind. All right. So other than that, okay, all right. So interesting things. Okay, I want to go through also the earnings season. Actually, yesterday, Amazon and Apple released their earnings. Okay, to be honest, Amazon earnings is actually not fantastic. Actually, it's below expectation. Okay, so AMZN. So this one, okay, go to the news, also old news yesterday, but in case you don't know, all right, so Amazon, Apple released their news yesterday, but the shares of Amazon actually surged 12%. Okay, it's not really good result, but instead it surged, okay, it rallied. Let me see. Okay, lowest earnings per share. Apple is beating, okay, added 3% more of the revenue and such. So all this, you can go through the data. This is not really that important. So important is then go through this, okay, Amazon. So in the I think trading view, right, under the earnings, you can see that there's this E logo here. This is the earnings. In fact, if it's red, it means that it is no good. All right, so you can go over here at earnings and revenue. The earnings, okay, estimate earnings per share, I think is 0.12, but reported is negative 0.2. So surprise is negative 0.32. All right, so it's not that good. But the share price just rallied. I can tell you, if this was the case, a few weeks ago or in June, okay, Amazon will tank. Okay, but the sentiment has changed for the past 1 or 2 weeks. Okay, even though the rate hiking, it is 75% basis point continue to rate hike. Okay, the market has already priced in, okay, expected this already, and the sentiment is actually pretty okay. And in fact, quite a number of stocks actually rally also lah, okay? But just to let you know, because of this sentiment thing that, even though the earnings result were not very good, it rallied instead. Okay, so earnings doesn't mean that you have good earnings, you rally. You have bad earnings, you will just plummet. So it depends on the sentiments as well. Okay, you realize that the market sentiment has changed really. It doesn't fall on bad news anymore most of the time now. Okay, all right. Even for the technical recession, the market also continue to rally. All right, but of course, later I'll share with you. I don't think this is actually the good time to enter right now if you are doing short-term trading. All right, or even longer term, we are still overall in a downtrend. So I'll share that with you later. Okay, so anyway, some of these earnings, right? If I think I never shared before, but some of you might know, you have come across all this poster about earnings one, right? So this is the one, earning whisper. So you can go through this. You know that today what are the earnings result? Before open they are 79. Okay, after closing there are 7 companies that's releasing their earnings. So you can go through all this. I won't go through with you. Another one that can follow is actually their Twitter, also earning whispers. Okay, which is also quite popular. Okay, so I will post the link in the chat. Okay, they have about 366k followers over here. So you can see all this chart, right? I think most of you have seen before. Okay, all the anticipated earnings and such. Okay, so I put the link in the comments already. All right. So of course, the recession thing is somebody, as most people are kind of more interested in. Okay, how many of you are actually bearish about the market right now? Bearish about the market right now? Okay, you are still bearish. You think that because of the recession is coming, okay, you think that this stock market can continue to fall further. This is just a dead cat bounce. This is just a dead cat bounce. All right. So if you think it is just a dead cat bounce, okay, just type BCB. If you are bullish, just type bullish. Okay, can you just give me maybe 30 seconds while I get my cup of water? Meanwhile, type your answers in the comments. I'm really very thirsty, so give me a while. Okay, I'm really very thirsty. Give me a while. Give me just 30 seconds. Give me a while. Okay, I'm back. I'm very sorry about that. I need water. So let me see the answer over here. Calvin Yo said chicken genius. Okay. What did he say? He is bearish, right? Am I right to say that? Unsure can be either direction, PLE, okay, bullish, okay. Wenjie DCB, bullish, bearish. So actually they can also can see that the consensus at this moment in time, it is still actually bearish, not bearish as in still unsure lah. Consensus is still mixed lah, okay, it's still mixed, but generally 50-50. But of course, if you actually watch the Nasdaq Trading Festival, you're talking about Larry, right? What did actually Larry mention? He's bullish, right? And he think that the probability of a recession is still low. Okay, so certain things that I'm looking at is actually the employment rate so far, which is like what the economists are looking at instead of just the numbers of 2 consecutive negative GDP growth. Okay, they're looking at other things. I think unemployment rate is also one of them. All right, for example, unemployment rate, it is still low so far. Let me go through the link over here. So right now, I mentioned before already, I think just before the Nasdaq Trading Festival. So right now, our unemployment rate, it is still low. So this is still a good sign. So if you actually realize for the past, all the recession, unemployment rate has to shoot up. Okay, all this gray area, okay, gray area, all these are recession. So unemployment rate shoot up, recession, unemployment rate shoot up, recession, unemployment rate shoot up, recession. shoot up, recession, shoot up, recession, shoot up, recession. So the good news is that we are still actually, at a low unemployment rate. So this is just one factor that I'm also looking at right now. Okay, I repeat it, as in I actually mentioned before already, so I'm gonna go through. So what I'm going to recap is that what actually Larry is looking at. Okay, this is something new to me when he first mentioned in the video. So what he is looking at as he presented in his video, so he looked at two things. Okay, I'm sure that he looks at other things as well, but these are the two things that he mentioned in the video. Okay, in this session, one is the capacity utilization. So of course, in the video, he didn't mention the link and such. So I'm going to share with you, okay, where to get this data. Actually, in fact, if you go and Google, you can also get this data yourself. So I'll post the link in the chat box over here, right? So this is the capacity utilization. Okay, so the definition, okay, right, is quite a mouthful. Okay. All right. So what is capacity utilization? Basically, blah, 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 is the percentage of resources used by corporation and factories to produce goods in manufacturing, mining, and electric and gas utilities for all the facilities located in the US. Okay. We can also think that, capacity utilization as how much capacity is being used, okay, from the total available capacity to produce the demanded finished products. Oh, quite a mouthful, right? Okay, all the definition, but essentially, okay, is how much all these companies are using, okay, to produce the finished good. Okay, so we are still not at full capacity yet, I think. Okay, so again, the gray shaded area, all these are the recession. So what Larry actually mentioned is that, the so-called TCU, okay, I call it in short, the capacity utilization, the TCU over here, TCU need to fall. Okay, then you can see that there's recession, need to fall, then there's a recession. Okay, I see a spam message over here. Wow, someone impersonate MarketWise Asia. Okay, I'm going to block the user, okay, and delete the comment. Okay, all right, so you can see that this when it fall, okay, when it fell, there's recession. When it fell, there's recession. When it fell, okay, there's recession. And when it fell, there's recession over here. So right now, what Larry, of course, the 2020 COVID sell off, before it actually had a very brief recession, it also fell quite a bit over here, okay. So right now we are still at a high. It hasn't shown any sign of going down yet. Of course, you need to understand that all this economic data is actually delayed. Okay. It is not real time. There's some lag time also. Okay, it is not real time. All right, and then another one is the diffusion index, which he mentioned also. All right, so I'll post the link in the chat box. Okay, so this is the one. This is the diffusion index. Okay, the actual link is actually very long. So I use the shortener bit.ly to share with you guys. So it's actually taken from, how come so many fake users? So anyway, by the way, guys, if you see any MarketWise fake one trying to message you or spam, please report them. Okay, please report them. All right, so this is getting irritating already. Okay, all right, so this is from the Chicago Fed National Activity Index, CFNAI. All right, so this is where he got his chart, all right, in the presentation. So again, it can be quite a mouthful to explain why is it. Okay, the CFNAI diffusion index represent the 3-month moving average of the sum of the absolute value of the weights of the underlying indicator whose composition, blah, blah, blah. Okay, I don't go through that. Okay, basically it's all this thing at the top. Okay, all the activities over here, they do a kind of a consolidation, the moving average of the sum of the total value. All right, so in short, okay, periods of economic expansion have historically been associated with value above 0.35. So this dotted line over here is the negative 0.35. So price need to go below negative 0.35, then there's a kind of economic contraction. Okay, so right now we are still above, we are still above the negative 0.35. We briefly hit, okay? We briefly hit, but then come back up again. So haven't really go way below negative 0.35. So can you understand what I am trying to say or explain to you? Okay. So if you understand, just type yes in the comments. Just type yes in the comments. All right. Just type yes in the comments. I'll take a sip of water first. All right. So let me take a look at the comments. Pauline said, I'm bullish till end of the year. Next year, I'm not sure. I think it depends on how the bond yields go. Okay. Mark said, besides this GDP, you need to track unemployment rate, which I talked just now. I mentioned just now, non-farm, payroll, and yeah, all the things, right? Yes. All right, Ken. Of course, another thing that people are looking at, zooming in is actually the bond yield, right? Bond yield spread, right? So let me see. So this is the 2-year versus the 10-year spread. All right, so 10-year versus 2-year. Let me go through this over here. All right, this is from Trading View. So it has already, the yield curve has actually inverted already. So anytime when there's inversion, all right, you signal recession in the coming months or years. Okay, so you can see the inversion. So this is zero, way below zero is the inversion. Okay, this is, it has actually inverted already. So once again, I mentioned before in my previous Facebook Live, okay, when it invert, okay, it is a leading indicator, no doubt about it, but it doesn't mean that the stock market will going to crash immediately. Okay, there is a lag time. The lag time, actually, I've forgotten what is the lag time. Normally between 6 months to 24 months. I don't know where I got the data from. I think if I remember correctly, there's a lag time. Actually, yes, there's a lag time, but just it could be 6 months to 24 months, to be 6 months to 2 years. So we won't know. But at this moment in time, okay, I think the market, based on price action, it is still pretty bullish, and we still have some time. Okay, it doesn't mean that you're going to crash immediately, even though we have like a recession right now, a technical recession. Okay, Ken? All right, so I've gone through this already. So, okay, I will go through this. Some of you, as I mentioned, right, whether you think it's a dead cat bounce or a new bull market has started. So I'll go through the technicals, okay, the market breadth, and also the intermarket analysis. All right. How many of you actually attended Jay's booster webinar yesterday? How many of you actually attended? If you attended, okay, just type the letter J in the comments. Just type the letter J in the comments, okay? So, do respond to me, do engage with me, or else I'm very boring now, okay? One person talking only. All right, so do engage with me. If you attended yesterday J booster session, just type letter J in the comment. All right, so if you are inside our mailing list of attended the Nasdaq Trading Festival, you should have gotten the replay link already. If you haven't, okay, you can subscribe to our Telegram channel, all right, where I actually post the replay link. Okay, because this is the replay link over here. Okay, so he mentioned about what are actually the strong sectors that ever since the June low. All right, so where he has gotten the chart is actually from stockcharts.com now. So this is the link over here. I shall post it in the chat so you know over here. All right, so the date. Okay, let's go through the chart right now over here. So yesterday he actually want to take the low over here. So the indices actually make the low at this date over at about 17 June, right? 17 June. So can go to 17 June over here. Okay, then about 17 June. All right. So you can see what are the sectors that are actually performing strongly or outperform the S&P market just by looking at a glance. You can see that, the consumer discretionary is very strong. The technology is actually very strong. Also, utilities is still strong. Real estate is okay, still pretty strong. So if you do compare the outperformance, you can click on this button over here, S&P 500. right? Then you know that which are the one that is outperforming the market right now. So as like what Jay mentioned, right? The consumer discretionary, okay, the technology, these two, okay, utilities, real estate, okay, these are the one. Can clear? So you guys know how to get this. So actually, this is also what I am looking at. Also, discretionary and technology is pretty strong. So there's a reason. There's a reason why technology is getting stronger for near towards the end of this July. All right, so this is the one that I'm going to share with you, okay, which you should have gotten it when you subscribe or register for the Nasdaq Trading Festival, the US stock sectors cheat sheet, right? Okay, and if you realize, I mentioned that, in the video, the bonus video, I mentioned that, in the coming months, if, okay, the market is going to get more bullish, okay, then you can take a look, hey, what are the sectors that is performing strongly and such, okay, all right. So let me just zoom in over here, right? July, can you see that July, okay, based on seasonals, it is actually a pretty strong month, okay? In fact, most of the time it is all green, all right? Can you see that? Of course, technology, 87% of time it is positive, so technology is strong, right? Consumer discretionary is also not too bad. Real estate, can you see that real estate over here, all right? Is real estate strong or not? Over here, since the June over here, strong, right? July also strong, right? Okay. So this is the one. And moving forward, to August. Actually, August is not a very, very good month, okay, compared to the rest of the month, like July or like April, March. These are good months. You can see that August got some red, neutral, blue. Okay, red doesn't mean that it is bearish. It's just that, there's a 40% chance that it has outperformed. It has gone positive. Okay, so it just tells me that I have no kind of edge trading the market. All right. So green one, definitely you know that this sector is very strong with the edge. Blue, orange, blue, red, no edge lah. Okay, but generally you can see that the August not so strong. Typically one, the stronger one is actually like technology. All right, 60%, 67% chance it is positive in August, and then industrial. Okay, index okay lah, okay, and energy not that strong, materials also not that strong. Blue is actually 50 to 64% chance, so it is kind of a neutral. So that's okay, not much edge if you really want to trade that. Okay, I really only want to find a very, very strong one. So can you see that actually, if you really want to trade the August month, you can trade the technology, okay, industrial. Okay, industrial. If you look at the equal weight sectors, okay, where all the stocks are equally divided, because this typical standard one like XLE, XLF, or the XL something one, they are market weight. So all the big companies, they have a lot of weight in the ETF components. But this is the equal weight, where all the stocks are divided equally into equal weight. So for August, can you see that the orange one, technology, it is the stronger one. Doesn't mean it's strong, it's just that stronger one. All right, comparing to all the other industry, all right, August, okay, software, service, it is the stronger one. All right, strong one, 80% chance in August, okay, it is positive. All right, so can you see how useful this cheat sheet is? And moving forward, okay, September, October, kind of a neutral month until November, the market, typically is the Christmas rally, okay, Christmas rally. So you think this cheat sheet is good, just type good in the comments. So I give it for free. I give it for free when you actually register for the Nasdaq Trading Festival. So you should have already downloaded it already. So if you think it's useful, if you think it's good, just type good in the comments. So it gives you an idea what sectors or what industry most likely should move, and you should concentrate on some of these key sectors. Well, there's so many stocks out there, so many sectors out there. Okay, not many sectors, I think 12, but which one do you want to focus on? All right. So Kevin is asking, right, so where to get it if haven't? Very simple. Just now I mentioned about this Nasdaq Trading Festival, right? So just register, watch the replay again. You should receive the thank you email, and you should receive it in the email. Okay, these are US stock sectors cheat sheet over here. Okay, so that's the reason why. And looking at the consumer discretionary, all right, so XLY. And by the way, consumer discretionary. So what are the stocks that are in the consumer discretionary? Very simple, ETF.com. That just type XLY, like Amazon, Tesla, all your consumer goods. Basically, when you are feeling, economy is good, okay, you have the money, you spend on all these product and services. Okay, XLY, consumer discretionary. You can see that these are the stocks, like Amazon, Tesla, Home Depot, McDonald's, Nike, Starbucks, Booking, you go travel, and all this okay. So they are generally kind of a risk-on sector. When the market is good, okay, they tend to rally also. When the market kind of a bearish mode, the consumer defensive, you tend to hold their fort, and also the utilities So when the consumer discretionary is moving well, it is kind of a the market is having a risk-on time right now, okay, and it is also an indicative of the economic strength. All right, so if you take a look at XLY over here. XLY. All right, so you can see that today is also moving higher because, of course, Amazon is moving higher, a lot higher. So you can see that it's a bit of strength over here. All right, and if I take a look at the comparison between the S&P and the consumer discretionary, very simple, just type XLY versus SPY over here. SPY, the ETF S&P 500 ETF over here. Okay, so you see that this is also very strong. This is strong. Okay, so it is actually ever since the start of July, there's kind of a market is having kind of a risk-on mode already, where the consumer discretionary start to move higher. Can you see, in the June, May to June, it kind of underperformed. All right, and then from near end of July, mid of July, start to outperform the S&P 500. So Dandelon is asking, right, may I know your opinion when the risk on will continue? This one I will share with you later. So right now I'm covering what it is happening right now, okay? Right now, okay? But of course, if you already watch the market closely, you have some clues already, all right? So another one is the technology, XLK, right? Previously, XLK, the technology was the one that led the sell-off in the broad market. So right now it is also, having kind of a rally also, okay? So kind of break the trend line also. And if you compare the XLK versus the S&P 500, I'm doing the ratio. All right, so this is the XLK / SPY, comparing the ratio. So you know that which one is outperforming one another. All right, so you can see that, has broken the trend line over here. The trend line. So starting to outperform the S&P 500. And moving August, if the market continues, then you should know where to look at, okay? August, typical good month for the technology stocks, okay? All right. And then, yeah, so this is the one that I'm looking at. Let me see. Okay, and then, okay, now comes to the falling yield. Okay, so this is the intermarket analysis over here. Of course, for the past start of the year, inflation, rising interest rate, rising yield is a concern, and this is what is weighing down the whole market. And if you actually look at the yield right now, the 10-year yield right now, it is actually coming down. Okay, it is actually coming down, which is actually good for the market. Okay, which is actually good for the market, which I mentioned also, I think, for the past 3 to 4 weeks already previously. Okay, it's starting to come down. This is the top over here, and the yield is coming down. So this is a signal that the market, okay, is thinking that the inflation could be stabilizing. Okay, the Fed doesn't have to increase the interest rate so much. Okay, I mean, the inflation rate could still inflation could still persist, okay, but not at at a greater than 9.1. Okay, last Facebook Live I mentioned that the inflation rate is actually at 9.1%, right? Okay, 9.1%. I said that in the 10th of August, when the CPI data comes, I don't think it will go above 9.1% anymore, because of all the commodities prices are actually falling for the past few weeks already. Okay, so yeah, understand this. So the yield also is coming down. So moving forward, there's even a possibility that the Fed could lower the interest rate also, because of the possibility of the recession. All these are pricing in. The market is trying to price in all this. Okay, it's pricing all this. Okay, all right. So if you take a look at the monthly chart, monthly, this is a very long-term chart. Okay, long-term chart. Monthly. So every candle is 1 month. Every candle is 1 month. Every candle is 1 month. So it goes way back from 1981 until now. So can see that, all right. Of course, as I mentioned before, also the era of a very low interest rate, it is gone. So we kind of, move into a higher interest rate environment moving on. Okay, all right. So break the trend over here, but within the next few months or so, okay, I think that the interest rate, the yield, can continue to go down. Okay, can continue to go down. All right. So remember, this is a monthly chart, 1 month. So this is the prior resistance over here. All right. Can you see that this 10-year yield price actually broke above this? The same. Videos. Hello. Can you guys see me? Can you guys see me? Am I back? Am I back online? Am I back online? If you can see me, just type yes in the comments. Okay, I'm back. I don't know what went wrong. I also don't know what went wrong, but I just kind of refresh my StreamYard connection. So everything okay? Everything okay? Just type yes in the comments. Type yes in the comments. Okay, I can see the yes already. Okay, so I think I lost. I think I lost some people after I kind of StreamYard unstable for a while. Okay, fantastic. Okay, let's continue. Okay, let's continue. So this is the monthly chart of the US bonds, right? US bonds, right? So I expect, okay, price to continue to fall within the next 1 or 2 months. Not price. I mean the yield, which means that if the yield go down, okay, this is a positive signal to the stock market. Okay, then the stock market, okay, could go higher. All right. So which means that, because this is the trend line, this is the trend line that I've drawn. Okay, So there's a light chance that price could test the yield could test at about 2.34%, somewhere around there, okay? And then to see to support over here. And then within the next 1 or 2 months, then we have to relook into the stock market again, see how the market actually move. All right. So within the next 1 or 2 months, I think the yield might continue to go down low. This is just my opinion. It doesn't mean that I'm right, but I'm based on the price action that I'm seeing. Okay, there's a chance. Okay, Ken. All right, so this is this. And then talking about the market breadth right now, okay, this is one of the more interesting part right now. All right, so as I mentioned, right, market breadth, you can look at the percentage of stocks above their 50 days moving average. If you are new to Market Wise Asia, I think this will be new to you. If you're watching me, this shouldn't be something new to you. So if you go through the market breadth, all right, percentage of stocks above the 50 days moving average over here. Okay, we can use line chart. All right, so use a daily time frame. So previously I mentioned, right, I think I've actually drawn this line also previously. So can you see that previously when the percentage of stocks above their 50 days moving average is at a very low area. You can see that all this low area. After that, when it hit, okay, this is just about 1% of all the stocks above the 50 days moving average. So after that, price rebounded. Okay, so in this case also, we are also doing the same thing right now. Okay, you can see that in near the end of June, the market was extremely bearish. Okay, the percentage of all the stocks above their moving average S&P 500 stocks okay, it is just about 1% only, 1%. Only 1% of the stocks is above their 50 days moving average. It's extremely oversold, oversold. So after that, the market staged a very strong rebound over here. All right. And right now, the number at this point in time is at about 74% or 75%. Okay. Right now, 75% of the S&P 500 stock is above their moving average. Can you see that just within a few weeks, the sentiment changed very drastically, 75%, which means that right now we are near the top, at least for the short term. We are topish. Of course, we are not exactly at the top yet, but somewhere near. Okay, can you see that previously hit the 75% mark? Okay, the market kind of come down. Okay, and we are once again hitting the 75% mark. Will the market come down again? Okay, I will share with you later. So at this moment in time, okay, if you are thinking to chase the market, to buy right now, especially if you are doing a short-term swing, holding for 1 to 2 weeks, that kind, my suggestion is that don't chase the market. Okay, don't chase the market. Okay. 2 weeks ago, I say that I'm secretly bullish on the market. You should enter I mean that not now Now the market rally for so many days already. Then you want to enter, then something is wrong with you. What I call is the TMP. Okay, 头脑派. Okay, as I mentioned during yesterday, Facebook Live, right? Okay, the people always do this the same thing again. Okay, when the market is at a low, okay, you don't want to buy. At a high, you chase already. Market pull back. Hit your stop loss. You exit already. Don't dare to buy again. Market go up higher, you chase again, market correction, hit your stop loss again, and then you keep repeating until you go broke. Okay, so right now I don't think it's the time to go on. So right now, based on this 50 days moving average, we are at a relatively high area. Okay, so if you understand, okay, what I'm trying to say, just type high, HIGH, in the comments. The market breadth is at kind of oversold at a high area. So don't chase the market right now. Overbought area, relatively high. Just type high in the comments. Okay, so I'll go through seasons. I'll go through later. So I'll walk through with you the chart. How's the market doing right now? Okay, so right now we are still doing okay. The market is still, Nasdaq is up 1%. Well, again, got this spam. Okay, so yeah, Let me go through the chart right now again. Also, this is a naked chart. I'll go through the S&P 500, okay? Not enough time already. S&P 500. All right. So this area right now, 4105 S&P 500, it is actually a very, I would say that it's a strong resistance. I can see the market kind of, hovering at this resistance 4105 area. So this area need to clear. So previously I said 3930, right? 3930, remember or not? That if you have watched my previous Facebook Live, then you should know. I said 3930. This is a level should watch if actually clear, then market have a potential to move higher, and that was the reason why I say I was secretly bullish. I was secretly bullish, right? Okay, and so at that point in time, I was pretty bullish somewhere around here, 15 of Feb. Yeah, about here lah. Okay, can. So the reason why again, the market is hitting a kind of resistance over here, right? It is because of the volume profile. I want to find the highest volume transacted at certain price. Okay, these will act as the support and resistance. Okay, the normal volume, okay, will tell you per day. Okay, so these are the volume. Every day will tell you what's the volume transacted, right? But it doesn't really tell me anything. Okay, I want you to tell me at what price were there the highest volume. So at least I know these are the key price that you should be watching out. All right, so if you are using a premium trading view, you can use the fixed range volume profile over here. Okay, so I use the S&P 500 from the top over here, all right, to the bottom of the recent market low. All right, so do you realize that previously I mentioned that this Sun to Sun in this 3930 was actually based on this volume node over here. So this was a relatively high volume node, which means that 3930, there's an area of interest. This is a price interest. Okay, so a lot of volume is transacted at 3930. So subsequently, price breakout, retest again, and then hit higher. So then right now, we are hitting another area. Again, I repeat, 4105. 4105. The reason why we're hitting is because of this value area over here. All right, this VA, value area, where 70% of the volume is transacted within this area over here. Right? Can you see that this shaded area, the dark blue area over here, this shaded area? So this is the value area. So I remove over here. Can you see between the dark area and the light area? So this is the dark shaded area. So about 4105 lah. So right now, can you see that price hit this 4105, and then price will have a resistance level. All right. So this is the area that I'm closely looking at. So right now, I am not interested to go long. Okay. If you want to go short, go ahead. You can try out. Okay. For a swing trade, okay, holding for within a few days to at most 1 to 2 weeks. So this is the area that I'm looking at. Price need to clear 4105, preferably breakout. Okay, then we test again and then go higher. All right, and if not within the next week or so, if price cannot go higher, then I suspect the price can go down like this. Okay, then testing this trend line at about 3980, about that. If price do really come down, okay, 3980, about that, okay. But we will see how the price action will go. So what is the indicator that you share? Okay, this is fixed volume profile. Okay, fixed volume profile, right? So just in the trading view, you can just type fix, okay, fix, FIXED. You can see the fixed range volume profile. So, but this is, you need to be a premium member of TradingView, okay. All right, so this is the area I'm looking at. Nasdaq somewhere about the same. I won't go through that also. So basically S&P, this will affect the Nasdaq and also the Dow also. All right, of course, if price can continue to go higher, then of course there'll be more resistance to watch out lah. Okay, this is based on a short-term resistance area. But if you're looking at a longer-term time frame, position trading, holding for a few months to 1 year, that kind. Okay, back to my bread and butter, the central pivot range and the cloud. All right. So Benson asking about actually gold. I exited already gold. Gold, yes. Actually, Larry talked about gold in the Nasdaq Trading Festival. Okay. Kai Yong also mentioned about gold. Seasonals wise, gold is pretty bullish in the month of August. Okay. Like Danderon said, gold also turned bullish. Okay. I had a trade and I exited the trade on gold. Okay. All right. So Stephen is asking, if do not have any premium trading view, can you use something like Williams fractals to identify? Yes, you can, but of course, Williams fractal is not looking at volume. So I'm not sure how you compare to that, but I mean that you can just test it out and see. And I'm not very familiar with Williams fractal. All right. Okay, so this is just my opinion, right? Ken? Yes, so back to the trading view over here. Okay, I mean the central pivot range and the cloud. So right now, longer term, based on daytime trade, okay, we are still in a downtrend. Okay, long term wise, we are still in a downtrend. As in broad market, we are still in a downtrend. Price is still below the cloud. Okay, although we seems like we are trying to break above the cloud right now. Okay, so I have this gut feel that price will do something like this. Okay, hit the cloud and then come back down like that. I'm not sure how it will go, but my feel is that price won't go higher next week, and it could have a correction. It has a correction. Right, have a correction. This is just my view. Doesn't mean that I'm right. Okay, I could be wrong. So this is my view. All right. So yeah, but one thing to look at it is right now price it is above the central pivot range. Can you see that previously? Okay, uptrend price always above the CPR, the green dotted line over here. Okay, once again, if you are new to MarketWise, how to install this central pivot range and the pivot points and the cloud, right? You can go to this YouTube over here. The YouTube tutorial, I'll post the link in the comments. Okay, so show you how to do that. Okay, back to the chart. So right now, can you see that price? It is above the central pivot range. So based on the daily time frame, the downtrend is actually not so bearish right now. In fact, the downtrend is weakening based on the daily time frame. Okay, but right now we're hitting the cloud support, as in cloud resistance. So do watch out for it. So again, these are July is ending soon. So next month, we will have a new central pivot range. I suppose it will be somewhere around here. So if the price really do come down, okay, I expect price to hold support at the central pivot range. So we will see this coming August. All right. But generally, I think the market has still room to go higher because overall, market, the sentiment is still not the best, but it is getting better. People are still bearish about the market. A lot of gurus or YouTuber, they are still bearish about the market. Okay, all right. So again, whether you are bullish, bearish, listening to any YouTuber or any guru, please listen with a pinch of salt, including mine. Okay, nobody knows what the futures holds. Okay. So whatever analysis that we do, all right, please listen with a pinch of salt. I cannot emphasize this more enough, okay? So you need to just 听听就好, okay? Have your own judgment and such. If you agree with me, okay, just type agree, A-G-R-E, agree in the comments, okay? Have your own judgment, This is just our personal view. And looking at the VVIX index, okay, VVIX ratio. Okay, I don't have the time to go through now, okay, but it seems that we are okay. So it's still going higher. We are still going higher. All right, we're still going higher. And yeah, this is the VVIX, VVIX over the VIX ratio. I no time to explain once again, but looking at that, there's no divergence right now. So I think the market, it is still okay. okay, I think has more room to go higher. But I think the best is that the market has some pullback, okay. I don't want to keep going higher, because if it keep going higher, then this bull run cannot sustain. So I prefer to actually have a pullback first, okay, and then we break above the cloud and such. So again, I mentioned previously, all right, you know, price to turn into an uptrend, okay, price to be above the CPR for 2 consecutive months, okay. So very likely this month price is going to be above the CPR, all right. So if this coming month, next coming month, August, if price can still stay above the CPR, okay, very likely, okay, the downtrend has turned into an uptrend, and don't go short anymore. And I would say that 90% chance, okay, it has turned into uptrend, okay. No matter what the news is telling you, recession is coming, okay, this can't, or every negative news, okay, is telling you everything, okay, or the QT, the Fed is doing a restriction on the easing, or whatever it is, okay, all the fundamental news, but price is telling me that it's heading higher, then I will follow the price, okay. The news is always lagging one, all right, clear. Follow the price. You can read the news, listen to news, all the data, okay, but based on the trading perspective, holding for a few days, few weeks, okay, to position trading, holding for a few months, that kind. If price is heading higher, I'm going to go long, no matter what the news having that we're heading into a recession. I'm going to go long if next month price can hold above the CPR. Can I hope you guys understand what I'm trying to say. So 2 consecutive months. If you look through previously, I also mentioned before, if you've been watching me, look through prior to that, when the market turn, okay, this COVID, all right, come down, price above the CPR for 2 consecutive months, okay, the market just rally, okay. Previously, okay, when in 2018, when price had a market crash, heavy correction, price above the CPR for 2 consecutive months, the market just rally, all right. And this also a sharp turn, okay, when price above the CPR for 2 consecutive months, okay, the market just turned, all right. And some more, what else, okay, and 2005 is a bit choppy, okay, but after that 2 consecutive months, okay, there's a chance that the price can continue to go higher, all right. So you have to watch the price action, right? So other than that, I think okay, let me go through with you some seasonals. I'm going to share with you before I end this. Okay, actually 15th of July, I mentioned that these are the seasonals, some trade ideas, all doing pretty well. Health, semicon, treasury bonds, home builders. Treasury bonds, okay, I took that trade, treasury bonds, TLT. It also do pretty well, right? If the treasury bonds continue to go higher, which means that the yield is going to come down. Okay, the yield it is going to come down, all right, which is in line with what I shared just now, right? So if treasury bonds go higher, the yield is going to come down. Okay, so all these are not too bad, just before the Nasdaq trading festival. So right now, I'm going to share with you, okay, for seasonals for August, okay, actually for the 10-year note, this is actually it is the futures are called ZN, but you can use TLT, the 20-year bonds, as a proxy, okay. 1st of August to 30th of August, okay, for the past 21 years, 90% of the time it is positive, all right. So looking at this is the actual treasury notes are for 10 years, okay, which is very in line with the treasury bonds now. Okay, you can see that it's starting to move higher already. Okay, all right. So in fact, for the month of August, okay, it is based on seasonals, it is a good month for the bonds. Okay, I repeat, for the bonds. Of course, it doesn't mean that it is going to go like that. Okay, price can of course go down like that also, but we have to watch the price action. So watch the price action for any trigger. Okay, of course, I won't go into the trigger for the price action. All right, so watch out yourself. Okay, and then go. Okay, go. Like take a look at gold. As I mentioned, Larry mentioned that seasonals, it is actually good. Okay, go actually I enter somewhere around right at the bottom. Okay, this is obviously it's luck. Okay, I catch that, but right now, gold August is also a pretty good month. Gold, so gold 2nd August, but the period is shorter. Okay, until about 18th of August. For the past 11 years, okay, 91% of the time it is positive. All right, and previously I also mentioned about tech, right? Tech based on seasonal sectors, right? Okay, August typically software tech is the better month. Okay, software and services. So in fact, the data that I have is actually IGV, which is this also tech. IGV is actually let me see, US tech IGV. IGB is actually the expanded tech software sector. So what is the component stocks for these tech sectors like Microsoft, Salesforce, Adobe, Intuit, Oracle, ServiceNow, Activision, Synopsys. Okay, all this you can go through them yourself. All right. So for IGV, 2nd August to about 25th August. Okay, for the past 10 years. All right, 90% of the time it is positive. All right, Ken, this is for the bull. Okay, for the bear one, I have only one. Okay, this is actually the US dollar. Okay, for 2nd of August, typically to the 25th of August. Okay, for the past 10 years, 90% of the time went down. So let's take a look at the dollar index. Dollar index. It is over here. Okay, so can you see over here when price actually hit the way I draw trend line, okay, the trend line over here, all right, it is starting to go down already, okay, starting to go down already. So I think there's a chance that, moving forward in the month of August, I think dollar index can come down a little bit more, okay, and of course, this will also, based on intermarket analysis, this will deem more bullish for the US equities as well, okay, all right. So again, all these thing, okay, does not mean it is 100% one. Oops. Okay, all these seasonals doesn't mean that it is 100%. You still have to watch the price action. Not 100%. Not 100%. So if you still need to watch the price action. Okay, understand? If you understand, just type the letter U in the comment. If you understand, just type the letter U in the comment. So I don't want people to just copy blindly. Hey, Alex say can enter. I didn't say can enter. I just tell that based on seasonals, based on historical data. Okay, typically these are the things that are bullish. These are the things that are bearish. Okay? It is not 100%. You still need to watch out for a trigger. Okay, understand? Just type U. Can yeah. So any questions so far? Any questions so far? So let me see what I want to cover. Some else, any other things? Yeah. I basically cover quite a number of things. 1 hour, 12 minutes so far. Okay, so let me some question. Besides price, do we need to look at the volume? The volume that I'm looking at is actually the volume profile. Yeah, the volume that I'm looking at is actually the volume profile. Okay. All right. How long into August do you determine that price is sustaining above the CPR? So Darius, I mean that don't need to chase or to be rushed lah, okay, until the end of August, 31st of August, I think that is fine, okay. If the market is going to turn, okay, there'll be chance to go a lot higher lah. I mean, no need to want to chase at the kind of at a low over here. There'll be chance one. So wait until the end of August if you really want to trade for the longer term basis. All right. Xiang Lun say, thanks Alex, got some profit from semicon and home builders. I mean, this is this goes to you lah. Credit goes to you because you took the action yourself lah, okay, and you know how to trigger to entry. So credit goes to you. All right. So Henry is asking, what do I think of the XLB? XLB is a material, right? XLB looks okay lah, but right now XLB is also underperforming the rest of the sectors. And okay, very simple. So if you go and see how do I take a look at XLB, so go to stockchart.com. All right, you can use this candle glance. Okay, I'll post the over here sector ETF candle glance. I post the link in the comment. So basically, this is all the sectors comparing. So this is the S&P 500. You can see that above all the moving averages already. So it's nearly crossing the 2050. Okay, you can see there. So XLY also very strong. XLC not so strong. You can see that it's still below the moving average. So at a glance, you know what is actually moving. XLK TED is moving. Okay, XLI also moving. XLB, can you see XLB? XLB, oops. XLB, it is over here. XLB, follow my arrow. Yeah, this one. Okay, this one. You can see that, not the very strong one. So yeah, I mean that it is heading higher, but comparing to the rest of the in the sectors, not the strongest. So I wouldn't touch that. So Henry is asking about XBI. Okay, XBI, I'm still holding on. I didn't buy call option. Okay, I didn't buy call option. I just buy straight into XBI. XBI, previously it ran a lot, so now it actually kind of moving sideways again. Okay, this is, to me right now at this moment in time, it is still constructive. Okay, it is still constructive. One leg higher and then a kind of a bull flag. So if it's going to go higher up, okay, then it'll be good lah. Okay, if not, my stop is somewhere around at the low over here. Right? If price doesn't go my way, all right, hit my stop and then I'll exit. But right now, it is still looking okay. Yeah, for Chinese stock, right? Hang Seng, a quick one. Hang Seng. Okay, due to some recent news, right, it is not moving very well, but I'm still holding on to Baba. Okay, so because my Baba is holding on for until 2024. Okay, I'm still holding on. Yeah, so basically this is a lead call option, and yeah, I'm prepared to lose the amount, so it is fine to me. So because of the options, right, it's a lead options, I still have a long runway. Okay, I still have a long runway, so I'm holding on to Baba. But in terms of short term wise, of course, it is not looking very good. Okay, it is not looking very good. So below the cloud, below the CPR. Yeah, so short term wise, definitely not looking very good. Okay, again, the Chinese stocks are very sentiment driven and also by the government. So I think I forgot the reason why. I mean that I didn't really follow, but some CCPs, there's some fine again on the Chinese stocks, and then all these stocks starting to come down again now. Okay, so yeah, short term wise is not looking very good, but I'm okay with that. Okay, yeah, unless it is short term, then I'll cut, but this longer term, I'm still okay with that. Okay, so any questions so far before I end this session. I hope it has been useful for you. So again, if you think that this session is useful to you, just type letter V value, V, type the letter V in the chat. So at least I know that, I'm providing, good content to you, you enjoy it and such lah. So give me some encouragement. You think this is good, give me some like, share, or comments. Liking is free, doesn't cost you money. All right, just give me some like and share. Okay, so again, how come got this span? All right, so I think, yeah, thank you guys for all the V or the value thing. Okay, so thank you so much. I really appreciate it that you stay until 12:45 a.m. with me. Okay, so have a good weekend, have a good rest, and I will see you guys again next week. All right, so 谢谢. All right, see you guys again. Bye bye.